Hi everyone, my name is Kaustub Kale. So four ways that you can judge investments is what we'll see here. And then in the further slides, we'll also understand how do you analyze or choose investments, okay? How you pick up product. Firstly, four ways to judge an investment. It's called as the RRLT framework, return, risk, liquidity and time horizon. Okay? All of this has to be looked at in tandem in consonance. इसको एक साथ देखना होता है. Okay, return, risk, liquidity, time horizon. Return, what does it mean? It basically means what is the extra that you will get from the investment. Whether it is interest, dividend, capital appreciation, value बढ़ेगा, क्या होगा exactly? That is return. The next is risk. What is the probability that you will lose your capital, a portion of your capital, your entire capital? आप पैसा डाल रहे हो, क्या probability है उतना पैसा भी आपको वापस नहीं आएगा? Is the risk. The third is liquidity. What is the possibility that you can easily convert the asset back into bank balance whenever you need it, whether it is partially or full requirement? Okay, that is liquidity. The fourth is time horizon. What is the waiting period, the gestation period for the returns? For you to see the full benefit, is there any waiting period that you have to see before you see the full benefit? Return, risk, liquidity, time horizon, all of this has to be looked at in tandem, in consonance. इसको एक साथ देखना होता है before you analyze any investment. And then see, when someone comes and pitches you a product, is there a better investment available considering all these four factors? So pros and cons of all these four factors. Now let's move ahead. This is about asset allocation. Okay, so how do you choose a product? Okay, you decide your financial goal and your financial goal decides the product. So what is the financial goal? Any money requirement which cannot be satisfied from your monthly salary. For example, if I have to pay my mobile bill, it can be satisfied from my monthly income. If I have to do my daughter's wedding, it cannot be satisfied from my monthly income. So hence it is necessary to make a list of these large purchases, large financial goals, money needs. Generally, what are the financials goal? Home, car, vacation, child's education, child's marriage, your retirement, most important goal. All of these are financial goals. Write the time deadline. When do we require the money and how much do we require? This how much do we require has to be inflation adjusted. Accordingly, you plan and invest in the product. Your product choosing should be depending on your requirement and time horizon. So for example, let's look at this planning table. Okay, we are looking at this planning table for a person whose age is 30 right now. Say for example, he wants to get retired in the next 20 years. His corpus targeted is 2 crores. Please note 2 crores is a small corpus considering 20-25 years, but I've still assumed it for example purposes. Your monthly investment required through SIP mode in equity mutual fund, because that's the most easiest, convenient, flexible investment option, is 25,000 per month. The next is चाइल्ड्स एजुकेशन एंड चाइल्ड्स मैरिज के लिए अगर उसको और एक गोल है जहां पे 18 इयर्स में ही नीड्स 1 करोड़, 17,000 इज रिक्वायर्ड एज एन एसआईपी. सो सप्रा इन प्रोग्रेस सिस्टमैटिक इन्वेस्टमेंट प्लान, एसआईपी इन इक्विटी म्यूचुअल फंड. दिस इज हाउ यू एनालाइज. सो व्हाट इज द टाइम पीरियड, व्हेन डू वी रिक्वायर द मनी, how much do we require, adjust it for inflation and then decide which product is good and how much do we require for you to invest in that product. Now, which are the investment avenues available for you? Okay, there are two kinds of investment avenues: one that beats inflation, one that does not beat inflation. Which are the investments that beat inflation? Precious metals, gold, silver, real estate, equity, mutual funds will beat inflation. Equities will beat inflation. Which are the avenues that will not beat inflation? Savings bank, bank FD, basically your banking instruments, your fixed income instruments, fixed return instruments, bonds, debt mutual funds, insurance plus investment schemes, endowment plans, ULIPs, provident fund schemes, post office schemes will not beat inflation. Is it? Does that mean it's not important? It might be important considering your financial plan and your financial plan, but to a small extent, to a chota amount is necessary, but not a large amount, because beating inflation and growing wealth is very important for you. Get in touch with your financial advisor for the exact analysis. Now, hence, just to summarize, from an asset allocation perspective, understand one thing: if you are young, beating inflation and growing wealth is more important than not taking risk, because the risk reduces as you stay invested for a longer time horizon. If you are already retired, capital preservation plus liquidity and income generation is more important for you. So this is in-depth planning with respect to your specific personal finance, personal financial goals. Hence, get in touch with your financial advisor who will guide you best. Thank you so much, everyone. I hope this was useful.